Good day, traders. So today's topic, we're going to talk about Fibonacci sequence. If you're watching my video first time, we talk about trading Forex and making trading Forex as simple as possible. So I'm going to make this video as short as simple and let's get into it. So what is Fibonacci sequence? So you can see Fibonacci sequence was developed by an Italian mathematician, Leonardo Fibonacci, in 13th century. So that's you want to know, and the golden ratio is 1.618. So we'll come back to this when you're going to see the Fibonacci retracement, and all this is basic. How you want to know the history, you can go read it in Investopedia. So to draw Fibonacci retracement, I'm going to go direct into how you're going to do this. So first of all, I'm going to go to 4 hours. You're going to do this in your preset first. I've already have in my favorite. You can see here, this is my favorite shortcut. You go to Fibonacci retracement, and then you're going to do this in your setups. I know you'll have a different setup, but these are my key inputs. You're going to do 0, 0.3.82, 0.618, 1, 0.9217. And you're going to highlight all these 4, and here we're going to have another 5. So these the settings I use, and the rest remain the same for Fibonacci retracement. If you don't have a shortcut key, it should be somewhere around here. Yeah, here. The second bar on this side, Fibonacci retracement, just put a star and it'll come up here. So once you have this, I'm going to draw to you a simple how do you want to do Fibonacci retracement. So what you're going to do is, let's say market is going up in one direction from the lowest to highest. So when market goes lowest to highest, we're going to do it like this. What you're going to do is you're going to look up for, so this is going to be the wick and this is going to be the wick. I usually use wick to wick. So when market goes to this, you are looking for a retracement to enter back. So what does it mean? When the market comes down, maybe to 38, you want to look for bounce back. Or maybe when market comes down to 50%, and then you want to look for bounce back. Market come to 61%, you want to look for bounce back, and market when comes 71%. So just now the Fibonacci retracement have 61.8, right? 1.618. So their golden rules will be around this place, 61.80 up to 78.2. So this will be the area of interest where you want to enter your trade for the best entry. You don't want to enter anywhere which have less. Okay, basically this is what you're looking into. You want to take the highest and highest when market is going in one direction, and you want to enter when there's a retracement. Okay, anticipating market to come down. Same goes for when it's downtrend. If it is downtrend, you're going to draw from top to bottom. Why top to bottom? Because then only your 70%, 61% will be on top. So you'll be looking for re-entry when market comes up to 61% and bounce back. And then when market goes to 70% or 78%, you want to look for bounce back. So this is basically what you want to look into the entry of Fibonacci retracement. So let's stick with one for uptrend, just to make that how is it going to work. Okay, when you draw from top to bottom, the highest, lowest to highest. So the first rejection usually might happen around this area, 31.8. So this will be the first rejection place. And ideally, if you want to enter for re-entry, let's say you want to enter a long position from here, I'll suggest you look for 50% retracement. 50% retracement, you want to put your stop loss until 78.6 or below this, so that when market comes back here, it will retrace. And your take profit, you can look up to, the confirmed take profit is 38.8, but it's very less, so you can look up to 100%. So this will be your take profit stop loss. This for the entry of 50% entry. Let's say you are entering, you want to enter a bit below on 61%, it's going to be the same.
6 o'clock.
Your take profit, confirmed take profit, you'll have it on 31%, 38.8. This is considered a bit of confirmed take profit. You have it there. And if you want to go down, the stop loss should be here. So this we have 1-to-1 risk to reward. So the best case will be 78, and you look for 38. Then your stop loss will be just mid of here, or you have a support resistance, because this is the lowest entry you can get. But entering here is there's another risk about entering on the point of 78.62. Sometimes you can miss out the trade. So if you're waiting until here, you can miss out the trade. So what my suggestion is, you want to enter here, if you might miss out the trade. So my suggestion will be you mark the zone from 50 to 78%. So this will be the overall zone of entry. So ideally what you're looking for is when market go to 100%, you want to buy the market with 50% discounted rate. So when it comes to 50%, you want to enter below anything around this zone. So you don't want to wait 50%, this will be your zone for entry. 61.8 up to 78.2. So your zone will be 22.5%, 25% pips, just to showing on this average movement. So you can use this Fibonacci retracement on any time frame. You can use for 5 minutes, 15 minutes, 1 hour, 2 hours. Any time frame this will work. So now I'm going to show one live example. Let's see. Okay, now we are in Euro USD 1 hour time frame. So what I'm going to do is, so imagine we don't have all this. So imagine we don't have all this. We only have until here. So this is what you're having for now. So once you have that, I'm going to draw the Fibo. So from week to another week. So you see I've highlighted here the orange. This is for 50%. So what happened to the market here when it comes to 50%? Let's just zoom in for you. So when we zoom in, you see once the market tap, make a bit of rejection in 50%. But do you think 50% is good enough? No, that's why I said wait for 61%. See market tap 61% and come back to 38.2%. So what I suggest is now if you take a sell trade from here, your stop loss should be around 78.2% on mid. And then your take profit should be 38. See, it always respect the 38% for take profit. So this will be the first trade if you want to take the entry above 61 to 78% in the range. Let's say you waited, you want to enter your trade at 70% around here. So you want to enter 70%, the trade should be here. And your stop loss should be above 78 up until mid around here. This you need to play around with the stop loss. You want to be too big or too small. This will be like max out already. Always take like 50% out of 100 to 78. So you take a mid of these two. What I mean mid of these two is like this. So you draw half. Until it comes to half, you take that as your stop loss. That's just to reduce your stop loss. So once here, you can target 38 as your first TP. This will be your first TP. So this is like a confirm TP, and you can look for support resistance place to place your other TP. And let's say you waited until the end up until 78.7. You see, market just tap that place, and then it just goes down all the way to 38. And your stop loss just place it below or up until here. So this is how you use Fibonacci retracement. So the same thing you can use for any time frame. Let's say you want to use in 15 minutes. Just go down to 15 minutes. You look for like this bottom until top. So this is the longest. You see market comes down and then make a rejection. And this is another one. So this is a live market now. Let's say you want to take this to this. Why we don't take from here? That's another question. Why you don't want to take from here? Because market come down and make a rejection already. Then it's going down. So we want to take from the longest to the shortest. So that's where you can get a gauge. So let's say you want to zoom in and you want to take only the shortest periods. You want to scalp in and scalp out. Then you want to look for like this. Maybe you take from this high and go until this low. You want to do this, no wick. You can still try that. See what market does. You come back, first touch here, 50%. It make a reversal down. And then again 50%, it's trying to come down to 38. See? Let me just highlight it. First touch to 50. This I'm just choosing a random chart and then showing you. Then second touch to 50. Then it always touch to 38. So that's like a scalping. You can point out when it touch your 38%. Okay, let me just make this small. Okay. And then market touch again 61. Then it make rejection up until 50, never go 38. And then it touch again 70%. And then it just drop until 38%. So this is how you want to gauge. And 78, it still had a rejection a bit. And then it just shoot up all the way 100. So this is how you can use Fibo for any time frame, any method you want to use. Make sure you take the highest and lowest and you draw out these and you can draw out. You can get your take profit, stop loss. There's another. You can use this on day 1, H4, H1, M15 or M5. So you might have a smallest one also. So it all depends on how you want to enter. Let's say we have up movement from here to here. You even can look back for pullback. So you want to take from here to here. Since this the latest movement happened. So you want to look for here to here. Let me just delete this straight for now. Okay. So you look for here to here. So now according to this, you will find a rejection at 70% and 50%. So this will be your rejection rate for go up. So this is how you do your Fibonacci drawing. So that's simple as possible. So I try to finish this video within 10 minutes. So that's as possible. If you have any other comments, do let me know in the comment box and we'll catch up on the next video.